The Reserve Bank has it all to do, doesn't it, really? It's caught between slowing growth, rising inflation, the prospect, in other words, of stagflation.
Yeah, I mean, it's definitely a difficult situation for the RBI. I think it would like to cut rates, but inflation, it's been a hawkish central bank in Asia for most of this cycle. And we believe that, with the rupee under pressure as well, it has limited room for maneuver, so we're not expecting a rate cut.
They can't do anything, basically. If they were to do something, it wouldn't look right, essentially, would it?
Well, what they've done overnight, as you probably know, is they've instituted a number of prudential-type regulations where they're trying to limit. For example, what we are observing is exporters are withholding dollars from the market, expecting better levels on the rupee. So they're trying to close that channel. For example, they're trying to stop so-called speculative activity from becoming a self-fulfilling prophecy. So that may have a short-term impact, but the medium-term issues are still there. The current account deficit is clearly the Achilles heel for India. And when external financing conditions, we know global credit markets are seizing up. That's not a good thing when you're running a current account deficit.
What happens to growth, though? I mean, with the interest rates this high, are they just getting it wrong? I mean, they're not doing much on the fiscal side. They could be doing more there to give the monetary side a bit more breathing space because, as we know, the Indian consumer is not that affected by interest rates. We have industry affected very badly by interest rates, and that's surely the issue.
Yeah, we've seen industrial production surprise big on the downside in October.
I'm just talking about that. We're talking about corporate India as well. Look at the aviation industry.
Yeah, I mean, credit conditions are tightening. I mean, lending rates have gone up. That is affecting corporates. And some of these corporates have borrowed offshore. We don't think it's a systemic issue, but they've borrowed offshore in dollars, and they are now looking a little bit more vulnerable. Earnings are looking vulnerable on that basis.
Okay, well, how far does the rupee decline to?
Well, we see in the short term significant risks for further downside, meaning rupee reaching potentially 55 to 57 handle. That's a risk scenario for us. But there has been
an inflationary scenario as well.
Yeah. We've seen the RBI intervene yesterday together with these measures. That should help cap any upside to rupee, meaning depreciation in the near term. But unless we also get some policy commitments from the government, we think, on the growth front, such as structural reform. For instance, the reversal on the retail sector. Initially, it was announced that they would allow foreign competition in majority stakes. Then they reversed that. That's not.
And now the positive noises again. So there's a lot of flip-flopping going on by Manmohan Singh here. I want to just move away from India for a second, if you don't mind, because you are an Asian foreign exchange strategist, and I want to talk a little bit about what you think the key themes are in this part of the world when we look at next year.
One of the key themes in emerging markets generally is what's happening in the Eurozone and the risks presented by a slowing global growth environment. And given that the risk...
Is the dollar the main beneficiary here?
We think dollar, yes. In a risk-off environment, the dollar will be a main beneficiary. There'll be a lot of flight to safety into U.S. Treasuries. That usually helps the dollar. But if you look at relative value plays, we like Asian currencies versus EMEA currencies, mainly because the EMEA currencies economies are much more integrated to the Eurozone core and the Eurozone periphery. So they will do relatively badly in a further downside scenario that comes from the Eurozone. Whereas the Asian currencies, they have better FX reserves. They also have better fiscal positions on the whole, and that should help them buttress some of the negative impacts.
Ashok, top trade idea for 2012?
We like basically being long the dollar against Malaysian ringgit and the Korean won in a risk-off environment. But we like generally Asian currencies, so the CNY, PHP, and the Malaysian ringgit.
Yeah, like Philippine Peso, Chinese Yuan as well. And finally, do we get any movement of any real meaningful movement when it comes actually to the CNY as well, the RMB? Even though I guess you could say that 3 or 4% is actually meaningful.
No, we think it's slowing now because the current account position in China is more or less moving to equilibrium. So we don't think the currency is that undervalued. In fact, it's getting very close to equilibrium. So we're seeing much less scope for appreciation in the CNY.
Ashok, thank you so much for joining us. Have a great